Ladies and gentlemen, with rising acquisition costs, tightening regulations, and investors' expectations, a successful fintech startup in 2025 is more than just solving a problem, it's surviving pressure. In this session, Launch, Survive, Scale, Building a Fintech that actually works. Our moderator, Vitalii Bulynin, CEO and co-founder from Versus Trade, will introduce the session and his panelists. Get your notes ready and welcome them on board.
Hi, thank you very much. We're in, right? You can hear me because I don't have a microphone, so I'm not really sure, but I think it's all good. Thank you everyone for coming. I want to first say thank you for the organizers to give us this huge and great space where we can share ideas, where we can basically put all the innovative things all together, discuss in a very friendly manner. I believe this is great. So if you don't mind, I will just make a round of applause for the organizers. Thank you. And today we're going to discuss a very interesting topic. If you ask me, it's launch, scale, and survive of a fintech startup. It's first I want to introduce our speakers. Is Ms. Stavriana Kofteros from W11 Ventures.
Pleasure to be with you.
And Mr. Charalambides from RSM Global.
Good morning.
I believe the expertise of both of you will help us to cover the topic in a very deep manner. And so what are the startups, right? If you have a startup, you have to launch, scale, and survive. And the main thing now in Cyprus is the fact that a lot of startups are coming, flocking to Cyprus, not just those founders, but the investors are also here. And if you want a launch, scale, and survive, a startup, I believe it's a crucial point to put all those things together and be sure to have a roadmap, right? How to avoid the obstacles. And I'm speaking out of the experience because the company which we found, we started it a year ago, and we went through the round of funding, some compliance things, some capital raise, and so on and so forth. Here comes the first question of the Cyprus startup scene. And I believe, Stavriana, it's better if you answer this question. So the VCs in Cyprus, they tend to go to some new cool ideas, or what they're looking for is some market-proof startups, very safe play game. What is this? What is easier path, or what is their approach?
I'm not going to talk about the VCs in Cyprus. Good morning.
Good
morning, everybody.
It's end of session, guys.
I'll take a more international and particularly European approach. And the reason for that, because the market is too small anyway. And if you're a startup, it doesn't matter where you launch. You got to launch. And if you're still thinking about it, it's already too late. So it's better to launch. And what Hoffman of LinkedIn said, if you're not embarrassed by the first version of your product when you launch, you already launched too late. So just launch, because only when you get it in touch with the market, you start getting feedback and knowing where you go before you start burning crazy money. And so I'm going to give a more international.
Well, not every startup can be launched, on the bootstrap or an MVP.
Absolutely.
Some of them require funds.
Absolutely, but you raise internationally as well. Even though you might be very early stage and piloting in a smaller market, and Cyprus is fantastic to pilot things, but it is a small market and it is what it is. So you need to show data to your investors, whoever you're approaching, to raise capital. So now, if it's easy or not, it's never easy. That's one. It's particularly difficult in 2025 with all the how would I call it in a politically correct way? The global competition was crazy.
Turbulence.
That's going on. It's getting a bit out of hand in a way. But reality is whenever you have challenges, you have opportunities. There's never such thing as a level playing field in anything. There's always opportunities, and this is where founders, especially startup founders, are fast to see the opportunities and grab it and see where it takes them. Now, talking a bit about the capital raising in this particular point in time, and since that, on a pan-European basis, Europe is showing some resilience. I'm talking about fintech investments, maybe because it is a fragmented market, it creates more opportunities particularly for fintech. But there's a global slowdown of
Why is
investments.
so? Why 25 is so special and it's slowing down?
It's just statistics. It's just the
So
reason.
is
It's the
it a cycle?
carrot.
Is it a
It's always a cycle. Economy, in my opinion, economy. It's just a bit about economics. It always goes in cycles. You have in cycles, not Cyprus. In cycles, you have the highs, you have the lows, and it's particularly. I guess the global competition and crazy. You have all this announcement on the tariffs and all the turmoil, the geopolitics, the wars that are going on. Investors are GT, and not just the retail investors, but also more qualified or experienced investors. So we do have a slowdown, but not in AI.
Oh God.
The AI deals are
we go.
driving venture capital investing. We're talking about crazy money being raised, you've heard. But having said that, the last round of Plate, which is in the area of fintech, was, even though it was an over $500 million round, their valuation was halved.
Halved.
They raised at $6 billion, and the previous valuation was over $13 billion. So things are changing.
And the idea of the product was like AI things or something? No?
I think they had a bit of AI. I'm not sure.
Everyone should. It's a startup bingo.
I'm going to be honest with you. I asked ChatGPT to give me an overview of the statistics, and I did it on purpose. And this is where I want to, if you're going to take away one thing, would be, I do not understand why fintechs are not integrating AI heavily in their operations. And it seems to be that investors are following AI. Yes, you can tell me it's a trend and it's the next.
I do have an unpleasant answer if you ask me.
Please go ahead.
Being a person which is rather skeptical about it, I would say that with the fintech, the product should actually delivers, and it's very clear to see whether if it delivers or not. And if you add just a little bit of sprinkle of AI, it not actually helps to deliver sometimes. So,
But is it about, I don't think you can raise on a sprinkle. If it's just the cherry, it's AI, or
you
it's a
have to
chatbot
just
for
add
marketing.
to your pitch deck at some point, and there's like, and this specific part is covered by AI. It's like a startup bingo. AI, something should be there. But getting back to the question, so does it mean that if 2025 we are rather going slow, does it mean that the capital is flocking towards some more or less risky ideas, prove ideas, or they're still willing to start the cash bonanza towards, pretty much everything?
Numbers don't give that story. What the numbers are saying is that you have more money going in, but less deals. That means it's more mature. So it's bigger rounds. And most of the rounds, by the way, are breach rounds. There seems to be, everybody's trying to ride the turbulence in a way and at least be well funded so they don't run out of runway because it's crash and burn if that happens. So, and I guess, the next logical thing to ask is, okay, all right, I want to launch my startup. What do I do? Launch.
Well, you go out and
you're
seek
never going to
for
be more
funds.
mature if you don't start walking the talk, right?
Yeah. I think you should go and start, looking for funds if you want to start your startup.
And
This is-
bootstrapping at the same time.
And friends, fools, and family, right?
Whatever works.
Better both, everyone. But okay, if we forget about those friends, fools, and families, there is another part where you can get money, which is not that obvious, I believe. What I've heard, Cyprus-wise, right? Because we're talking, we're sitting here in Cyprus, is that there are some initiatives from governmental-backed or even EU-level initiatives towards the startups, how they can get themselves some more funding and what they can do. And I believe, Marios, there is something that you can help us maybe to cover a bit. What are those initiatives of if 2025 is rather slowing down from, private funds perspective?
Yeah.
Isn't it the time where the government should, put his shoulder, right?
Indeed. Good morning, everyone. You mentioned before about my professional, background, that I'm coming from RSM. Nevertheless, I also wear the hat of the board of director member in the Cyprus Investment Fund Association. And one of the initiatives, because I agree with my fellow panelists regarding what is happening in Europe, but if we want to focus on the Cyprus specific, I would say that there are a number of very positive initiatives. For example, the Cyprus Fund Association, one of our strategic aspiration for our term is to bring together fund managers and startups. We all hear that there is a lot, the ecosystem in Cyprus is becoming bigger, especially with fintech space, since we are talking about fintech, and there is a lot of appetite.
And seen is here, right, on a Cyprus soil.
On a Cyprus level. And this is very specific to Cyprus,
Okay.
but also you see from the government initiative as well, because we are talking, funding is very important, and it's the fuel. But if you pump fuel in something that doesn't feel that it will be working, someone will unplug. So it's finding the right people to partner at the very beginning in order to scale up. Because the title of our panel today is Survive as Well. Yes,
Yeah, I like that they put survive instead of thrive.
exactly.
Let's say.
Exactly. Also, another pillar is government funding that is coming from the European Union. And there are a number of centers of excellence in Cyprus that they can host ideas, they can host people that they are working in the startup and fintech also space, where they can provide support, where they can provide resources in order to help make the very first steps that are the more wobbly ones. It's not the real steps forward. So in Cyprus there is the potential. And given that this is backed by the government as well, it creates, at least in my mind, and the way I translate things from clients that they knock our doors for support, there is some positive aura out there in order to help them make the first steps in their life.
And is there any level of requirements toward the startup? If it wants to apply for such a support, it has to be on some specific stage, or
There are a number
the
of
industry.
It depends. There are a number of programs, either from the very early stage, those that they have the MVP and they are ready to hit the market. So there are various programs. Maybe if there are interest parties here, we can have a chat afterwards where we can direct them in the right path to help with this funding. Yeah.
Stavriana, do you have any experience with startups which has both governmental funding and private funding in the same pool, let's say?
Actually, yes. I'm going to wear another hat now. I'm also a European Innovation Council investment jury on the EIC fund, and that's a 10 billion funding, and it's not grants, it's a blended finance. Deep tech startups, European deep tech startups. So the idea of the commission was that they needed to heavily de-risk deep tech startups so they can raise from European primarily investors that are more timid, in a way, going into areas like quantum, like biotech, like life sciences, like energy tech, climate tech, some heavy stuff. So the idea is 2.5 million in grant money, which is non-dilutive.
Per project, right?
Yes, per company, and up to 10 million in equity that is managed by the fund, which is EIB money. So that's equity-based. And there's another program as well, and it's called the EIC STEP, and that's 100% equity. That's Series B, Series C co-investment vehicle. Okay. So you can get in at 150 million rounds with 10 to 30 million. Okay. Again, to help scale deep tech startups. So there's a lot of that going on. Not so easily in fintech, though, to be very honest here. And the reason for that is that, of course, there are strategic priorities for Europe that are considered strategic where it comes to strategic autonomy, et cetera, et cetera. We talk about globalization, but we're also what it implies. And
green initiatives?
Of course, it's the Green Deal, green transition is part of it, the digital transition, but in a more hardcore, shall we say, way. So they're heavily backing some very important technologies, like I said, in life sciences, anything that has to do with even for chips, crucial. Chips, not the chips. The chips.
I thought
superconductors, quantum. the next cancer vaccine, for example, crazy stuff like that. We funded a company about manufacturing cancer drugs in space. Zero gravity.
Why do you need to do it in space? Because of the zero gravity.
The zero gravity, yes. And interesting. And I'm mentioning this to show what deep tech kind of means practically.
The last rumor I've heard is that the infamous founder of Theranos, which were doing this blood test with a single...
That was a scam.
Yeah, okay, we call it this way.
With good context.
Yes. I think I've heard the last news was that she has like a husband or a boyfriend, and he is building quite the same startup. I believe she's kind of like a master of puppet doing these things. But I have another question. So if you got yourself in with governmental funds, does it mean that your company is like partially governmentally owned, or how it works? You have to give those funds back, or if it's...
No.
The simple answer is no.
And the not so simple? It's like they give you some percentage.
The government does not assume the role of a shareholder whatsoever.
Okay.
Basically, it's funding in the form of loan. That you don't have to. It's a grant. It's not
it's a grant.
It's a grant that it's provided to startups that they fulfill a number of criteria that they have at the very beginning, and should you comply with that criteria, then you can get the funding. But also here, what is important, because we are talking about Cyprus, and we have people with businesses in Cyprus, a startup in Cyprus. We are gradually getting attention from abroad, and this is something that we were missing for a number of years, because we might have the ecosystem, but maybe the capital market is not adequate enough for this funding. And I will tell you an example that is happening as we speak. A couple of weeks ago, I was with an official mission from Invest Cyprus in the UK, presenting Cyprus as a gateway of investments. Okay. It was a room full of people, fund managers, that they see Cyprus as an opportunity to divert some of their funding. And this is happening because I was there. I was on the panel on behalf of Cyprus Investment Fund Association. Mm-hmm. And I think the important thing is to create these paths, these roads of communication between the funding and the startup. And this is where we build the knowledge now. It was not part of how Cyprus used to deal with startups 5 years ago. And it's something that we see the potential now. And I see the potential because I speak with clients, with startups on a daily basis, in the sense that if you manage to have the idea and the funding on the same table, same part of the discussion, this is where you do miracles. We had people with brilliant ideas. We had the skills in prior years, but unfortunately none of those managed to hit the market because of the lack of funding. So I think this is a sweet spot at the moment, mm-hmm. and hopefully we'll build on this momentum, making things happen in the near future.
Okay, so it seems that with both of you, we can provide like to the audience and for those interested, like both paths, right? You, Stavriana, you can help with some private funds, and Marios, you can lead us to some governmental-backed programs, right?
Can I add something though?
Yeah, sure.
Depending on the program, because the EIC funding scheme does take equity. Mm. The equity part, the 10 million is equity, so they are on the cap table. They don't lead, they co-invest, they match the fund, they don't lead the round, they require a new lead investor on the cap table, mm-hmm. but it is equity. There's no such thing as free money, huh? Even government money is not free. It takes time.
I was referring Stavriana to it.
Yeah, and I don't know. I'm just giving another. Absolutely, I'm just giving a more overview.
Let's say if you would raise money from like private investor, they will keep an eye on how you spend those money. And what about those grants? Like when they basically hit the account of the founders, do they have to report in which way they spend or things like that?
Yes, of course.
Even more, actually, it's public money.
Public?
Of course.
So it has to be like published somewhere on the website?
No, public money means it's government money or European money, so there's a lot of oversight. you're using taxpayers' money, so it's not free money.
Yeah, I'm not saying about them to be free or not. I'm just asking, like, if you are a founder of a startup and you got yourself those grant, which is like 2.5 mil per se, right? So you just get those 2.5 mil injected one shot to your capital, and then you can buy yourself a Lamborghini, or no, you cannot.
And end up in jail.
If you manage to find that way, you should tell us as well how we can do that. Of course not. There are criteria. You don't get the money from the first tranche. There are stages. Don't forget that in order to get this funding, you need to provide a business plan.
Okay,
And
yes.
that business plan includes certain steps that you have to fulfill. It's not one day you do like that and you have the final product ready. You have to go through a series of work streams. So depending on those series of work streams, depending on the progress, then you continue getting that funding. And this is even more obvious when you are facing private investment. If a private equity fund will inject money, I'm 100% sure that people will have a seat on the board of directors, will be next to you all the time. So it's changing the game.
Yeah. It's not rock and roll anymore, right? If you would give an advice to the person who wants to basically launch, survive, and scale a startup, like, it shouldn't be like one sentence advice, but maybe, and it shouldn't be like advice which contains like everything in, not just in terms of funding, but what would you say? What would be your words? Stavriana.
Launch.
One
word. They need to launch. It's not about pitching blah blah, and because we're not. This is not Silicon Valley. Nowhere in Europe or in the world is Silicon Valley. And if your name is not Elon Musk or somebody that has raised and made money for their investors, so they're serial entrepreneurs with successful exits, the chances of raising big amounts of money just on a pitch deck are 0.0000. You can count the zeros after the decimal place. So you need to launch and have validation. Because it shows that you put skin in the game, and skin in the game matters more than you actually believe when you're going through the sweat and the sleepless nights. So just launch. Just make sure you launch on something you're passionate about, because things are not going to be rosy. And they rarely are, by the way, huh? They rarely are.
The passion will help you to go through those hard times, right? This is what will keep you. Okay. Thank you, Marius.
I had a different thing in mind, but I will change that now because we allocated too much time on funding. My experience suggests that people do not invest in ideas. They invest, first of all, in people. They invest in the mindset. They invest in the culture of the startup. So I saw brilliant ideas that never went through the funding rounds because people didn't have the right mindset, the right culture in order to fulfill the criteria imposed by those investors. And also for me, there is a huge, because I'm coming from a regulatory background and we are talking about fintechs, although we spend a lot of time on startups and so on, but the fintech space for me is like a big elephant in the room. There is a big elephant that everybody sees the elephant, but nobody actually tries to challenge the elephant, and that is compliance. A lot of fintechs, they start doing things in an effort to avoid compliance.
Yes, you're right.
But unfortunately, compliance is the fundamental, and it's the trust behind the fintech startup. So if people tend to avoid that, probably they end up in very bad situations. So my piece of advice, have the right people, have the right culture, but don't overlook compliance in this journey, because you will see that in front of you sooner or later.
Especially with fintech.
Especially with fintech.
I totally agree with Marius on that, especially with fintech, because compliance and regulatory is part of it.
It's hand-to-hand.
Absolutely, but in any startup where you have regulatory, there is some time of regulatory. Actually, it's the signal you give to potential investors. Because if you're going to take shortcuts on the regulatory, on one aspect, what makes me think and trust you that you're not going to take shortcuts on the governance of the startup or whatever. So it's about building trust. They say investors are adult supervision that is sitting on your board. So it's about also professionalizing the startup, creating a board, and start doing all the governance things that you need to do. So you need to be proper. And I absolutely agree, because it all comes down to one thing: the team, the people. And the earlier you are in your stage, the more important it is. Because what does a third person that doesn't know you have in front of them to judge that, all right, I'm going to be working with them for the next 5 years? Do I trust them? Can they make this work? When beep hits the fan, can they pivot? Are they resilient? Can they still, figure out the way to make it work? It's all about human trust at the end of the day.
Is it? So it's not just funding, it's a compliance way also, right? So you have to show the team, and you have to show the capability of the team, and to show that the team knows what they're doing in terms of the rules of the game, if we're talking about the fintech, right? And the regulation wise, and they want to be, their ethics, right? The professional ethics are of a high standard. So there will be no problem in future, right? Which basically is implanted in the startup from the beginning if you cut on those compliance things.
Yeah, absolutely. You said at the very beginning about the icing on the cake. I think the funding is the last one, it's the icing on the cake. If you have the right ingredients from the early start, then you have the cake there. So you can offer the cake and someone will buy that and just put the icing on the top. And this is what a lot of people, a lot of colleagues fail to achieve from the very beginning. I will not repeat what my fellow panelists said regarding the trust, which I fully agree with that. But people need to see regulation and compliance not as the braking pedal. It's like more of a navigation system. It's a navigation system where it will guide you through the traffic, it will guide you through a better way to reach your goal. It doesn't necessarily mean that you have to move fast, although fast is, especially these days, is important. But if you are a startup, the idea is to launch and make sure that you reach your destination rather than do everything fast from the very beginning.
See. Interesting. So in a nutshell, how to launch, survive and scale is to launch, right? And then get yourself some funding and make sure that you have a team and you know the rule of the games, how make it last for a longer time, and to be passionate about it, to go through the dark times, right?
Indeed.
Interesting. I think we're getting closer to the end of our session. Shall we run a Q&A? What do you think, guys? Do you have any questions? If no, yes, please.
Yeah, thanks first of all for being here. My question is what Vitalii said at the beginning about the survive and then scale. So in your experience in the last, let's say 2 years, everything that you invested in, how much of those startups still surviving and how much of those are really successful right now?
Maybe Stavriana?
I mean, the personal ones. All of them are surviving, if that's what you're asking, but it's not about surviving it. So there's not an exit point yet. So I cannot talk about success, the fact that they're surviving and thriving and growing. And let's measure that by valuation. So yeah, it's increasing valuations, but it's unrealized. It's paper money, all right? At the moment, since it hasn't been realized. So looking good so far, but an investment, like in reality in startup world, looking good so far doesn't mean tomorrow is going to be good. Markets can shift. So you have a new war is going to break out, or the war that's happening next to us is escalating even more. You never know which way it's going to go. And the point is, and this is where the surviving part is important. Whatever happens, it's totally unpredictable, whether it's a black swan event or whatever on earth it is, it's actually a war. You need to be able to ride that wave even though, and at least survive so you're better positioned than your competition, because everything is competitive, right? That you're not alone. Every startup has competition, so that you're able to at least be more ready when you come out of this turbulent time to take advantage and grow even more. So, c'est la vie. It is what it is. You just have to ride it.
Marius, you want something to add?
No, it's a very good question. I was trying to think of some of the statistics that I have back in the office, because it's a very good question in the sense that a lot of people or a lot of investors usually ask, okay, if I put my money, what is the history? What I can say, and I don't recall the numbers I can find, we can exchange current, I can share some of the figures. In the fintech space, there is a higher probability of success when they get the first round of funding compared to the usual startups. If I compare that amount with the RegTechs, and in the ratio, it's a higher percentage compared to the normal startups when they get funding and they don't make to survive. Also, another characteristic is that if they survive after Series 1, Series 2 of funding, the usual scenario is they will make it to the market and they will be successful. Maybe not achieving the business plan numbers, but they are successful and they can sustain themselves. For me, survival is for them to sustain themselves, make cash flows that can help them with their operational needs, and not be in a position to continue pumping money in the business. So it's a positive thing that I see in the market, but I can share more details maybe later on or with the organizers to make them public, at least from what we have as an office.
Thank you for the question. Thank you for the answers. And in general, I want to say thank you for joining us all with this panel. I believe you guys give a lot of insights. I was just trying to organize things here. And thank you everyone for coming. If you have some other questions, feel free to ask any of us. And thank you very much again.
Thank you.